common question I'm always asked by practically all my clients, usually my new clients as soon as they walk in through my door, is what business entity should we choose? There is no right or wrong answer. The beauty of accountancy and taxation, it all comes down to what are you doing today? What are your intentions? Where are you now? Where are you looking to go ahead? Are you a new business? Are you a new startup? Or are you an established business? If you are an established business, are you looking for an exit strategy, or are you looking to maybe pass down the business to your family? All these are key questions that only my clients or yourselves can answer these questions. But we'll run through them slowly so you can have an idea of what's available out there in the market today. Classic one is sole trader. This is exactly how it sounds. It's you going out there and trading on your own name. Very, very straightforward. And as a startup, I always recommend my clients start up as a sole trader. And the reason for that is because of the beneficial tax reliefs that you get on losses. Now, usually, as most people know, when you start up a business, you're looking probably to make a loss in your first year. Well, if that's going to be the case, you want to make sure that you can utilise those losses in the most tax efficient manner. Therefore, I always recommend as a startup, you start up as sole trader. It's also very cheap to start as a sole trader. You don't need much to get started straight away. Your next level is then partnership, which works in a similar way as a sole trader, except, as the saying goes, there's partners involved, hence the partnership. There's no limited number for partners. You can have a partnership of just 2 partners right the way up to unlimited number of partners. Your next stage after that, which is now a common theme, especially with professionals, accountants and solicitors, limited liability partnerships. What does that mean? It's taxed in the same way as a partnership, although you have what is called limited liability. So in that, now you're looking at asset protection. When you trade as a sole trader and a partnership, you have what is known as unlimited liability. So therefore, you have unlimited liability of all the debts of that business. So therefore, if you default on any loan, any mortgage on that business, you are 100% liable for those debts, which means the bank or the lender can come after your home, your personal home, your car, etc. You don't want that if you're becoming a successful business. So what a lot of solicitors now become limited liability, where basically the liability of those debts is limited only to the business. So no one can come after your home as a result. But for tax purposes, it works in the same way, although there's a few more requirements legally, like you have to file accounts at company's house, even though you're limited liability, even though you're a partnership and not a company. Next stage along is company, limited company. You then got a variety of the types of company, but it's either limited by shares, limited by guarantee, or if you eventually want to float, or you have a lot of potential investors, a PLC, public limited company. Although you don't have to float to be a PLC, but usually when you become a much bigger entity, you go via the PLC route for the purpose of effectively floating. The benefit of trading as a company is one, limited liability, very, very important. If you're looking at asset protection, you want to protect your assets, especially your personal assets, and you don't want them to be involved, you don't want the lenders to be chasing after your personal home. Go via the corporate route. Also some beneficial tax treatments as well, which we can speak about later in my further videos. But a key consideration when looking at all the different types of entities, where are you now? Where do you want to go? And the various type of taxes. Don't forget, all entities are taxed differently. Sole traders suffer income tax. Companies, corporation taxes, different elements. National insurance contributions, different. You pay class 1 national insurance as an employee, and employers pay national insurance, both for, if you're going to employ people anyway, even as a sole trader or a company. But sole traders will only pay class 2 and class 4 national insurance, which is a lot lower than class 1 national insurance. Look out for that again. Companies pay, again, I mentioned corporation tax, not income tax. Income tax is, don't forget, it's 20, 40, and over 150,000 is unfortunately horrible, but 50%. You don't want to be, once you're looking at profits in excess of £40,000, you're looking to move from individual, sole trader, partnership, right the way across to the limited entity. Thank you.